Good afternoon. Welcome to my webinar. Hope everyone's doing well today. If you're not sure where you are, hang out with us anyway, because we're going to do some cool stuff. Today we're going to be looking at TachEon Warp, which is a time signal trading tool available for NinjaTrader, as well as TachEon Kronos, which is a TradingView variation of that tool. My name's Michael, and I'll just quick throw my photo up here real quick, let you see. What's up, everybody? I've been messing around today with my ham radio. I got some 3D printed guide rails for it here on the side. I'm going to take it mobile out in the truck, I think. And so I've been experimenting with that. I built a custom DC charging port for it so I can use a little battery. And yeah, I'm really looking forward to starting up in the ham radio hobby again. And was late a few minutes putting my soldering equipment together. We're here today because I build things. Me and my partner, we build things. And for going on 16 years, we've made amazing trading tools. Arguably some of, if not the best, in the industry for traders like you. And so if you're here today and you found us, we also don't believe in accidents or happenstance, and you're here for a reason. Whatever it was, whatever series of circumstances brought you here today, my job is to show you what I know. And so cross my heart, Eagle Scout, no guru guarantee, no lying, no obfuscation, no stretching of the truth today, just what I know, how I know it. Let's get started. So the premise of our program, everything we do at our website, and by the way, if you haven't had an opportunity, please come back and revisit us at backtothefuturetrading.com. And the whole premise of what we do is that markets are predictive. They are predictive when no one believes us, when everyone in every forum says they're not. I just kind of chuckle to myself because I know they are. And I want to show you a little bit of what we've learned here today and how we sort of prove it to you. We do give out the times in advance for the Wednesday and Thursday sessions. So for example, today's E-mini S&P 5-minute signals were provided to us basically 4 days ago, according to the document down here. And that's what we do. We give out the times and directions in advance to prove to you that this is real. And then we let the times and the setups pass. 2 days later, we come together like we are right now and try to figure out if this thing works. And that's sort of where we are. Are we able to look at thousands of bars of historical data and see if there are any patterns that are repeating lately that we can take advantage of? So let me show you what I mean by that real quick, and then we'll go a little deeper down into it. Right here on the chart that we gave out 4 days ago. Let's go ahead and pull this up. I just want to draw your attention to some things. Is the font big enough on my screen where you guys can see that this says 1600 and this says 1600 also? Chris, does that come through? Eric, Bob, Shane, Mr. Murphy? My font is set to about a 20. All right, cool. So this is a 4-day-old signal, and this was today, 4 days later. So let's put a -4, and this is a +4. So this is actually 4 days later. And then can you see here on the 4-day-old chart where it says 155, and up here where it says 1355? Again, that's 4 days later. This was 4 days ago. And then 1 o'clock here, 1 o'clock here, and so on. So what I want to establish in the webinar before we go further is the trial essentially that you're taking now with us. We're all taking this trial together, this experiment, because every other guru, every other influencer, every other 19-year-old kid with a Sony Handycam and a big microphone with a spit filter on it wants you to do the thing that requires you to sit at your screen and watch it. You're like, oh, I think that's a fair value gap. Oh, it's coming near my trend line. Oh, and they're forcing you to be sort of glued to your monitor, watching every single tick like a blue-haired grandma with her ATM card wrapped around her wrist, just shoving it in every slot machine at the airport casino. And our premise is, hey, what if we give you this time, this map of times, 4 days before the signal arrives? And let's see what happens. So maybe you don't have to sit there all day. Maybe you don't have to watch most of your trades go immediately in the wrong direction. Maybe you don't have to overtrade or get out of trades too early when they had 90 minutes to go instead of the 9 seconds you stayed in. That's the premise of what I'm showing you here. I hope you guys can follow along with that. So now that we've sort of established this was 4 days ago, and this is the net result 4 days later, we have permission to sort of scoot this to the side and bring this to the forefront. Okay, now let's get our bearings real quick, shall we? Hey, Carrie. Carrie's up in Beantown today, freezing off his beans. up in the Northeast in Massachusetts, and so it's good to see you here, Carrie. Welcome back. Now that we've established that this is a 4 day later kind of thing, here's what I would start to argue. When people say our program works or doesn't work, I judge by what you're about to see, because we had all the times for the Euro and the London and the US session. So when I say we were expecting the banks to potentially buy at 3:30 a.m., the software marks that candle with a dot underneath it that matches the color of the signal. So 135 white, 4-day-old guess 135 white. Now there's a gap of time. We have a direction, which is up, predicted from 4 days ago. And now that gap of time lasts from 3:30 to almost 5:30, so almost 2 hours. And the program is warning us that, hey, historically, whoever moves the markets, and we're pretty sure it's the banks, this move historically starts at 3:30 and runs until 5:20. Everybody following me so far? Okay, cool. Now, where are these times coming from? Where are these times coming from? Because I've found personally, I don't know how you feel, if you don't know what's in the food, there's no way I'm eating that chicken. I lived in Long Island, New York most of my life. I moved to North Carolina 19 years ago, more or less. And there were jokes about what the meat was at the Chinese food restaurants. And every now and then you'd find out they weren't jokes. And so unless I knew who the owner of the place was or I'd been going there a really long time, I'm a naturally cynical person. How many of you here today come to webinars like this and you are a naturally cynical person? You've heard it all. You've seen every little magic trick that these knuckleheads know how to produce in a webinar. They get you all hyped up. And then 2 weeks later, you realize you bought a steaming pile of feces. Yeah, right here. I was in the same group. I speak feces. So if you ever want me to come with you to buy a car, I get that asked a lot. Will you come with me to the lot? Will you come with me to this place? I have a real estate broker I'm meeting with. I can smell feces. Woo, long ways. So what we're trying to figure out is, where are these signals coming from? And one of the ways that I want you to sort of envision this is the following. Imagine for 3 days in a row that the market goes up at 9 o'clock and down at 10 o'clock, up at 9 o'clock, down at 10 o'clock, up at 9 o'clock, down at 10 o'clock. So Phil, can you imagine if that's day 1, day 2, day 3, and exactly at the close of the 9 o'clock bar to the close of the 10 o'clock bar, that's where the turns come. Maybe one of the moves is really big, maybe one of the moves is small, and maybe this little piggy had a medium-sized house. But still, does it make sense, guys, that we're hypothetically looking at a scenario in time? Here, we'll make our little clocky clock, where for whatever reason, there's a pattern that exists, Shane, that starts at 9 and ends at 10. Now, I want you to imagine that tomorrow at 9 o'clock in the E-mini S&P, there's a spinning top candle, and from the high to the low, it's 3 points or 12 ticks. Is it outside, Sean? Is it outside, Jeff, the realm of possibility that we put a stop right here and a buy order right there and see if this thing might go up until 10 o'clock? Would that be a valid time-based temporal approach if we had seen this happen over and over and over again? What do you think? Because this is where the times for the software come from. They're not pulled out of the ether. There's no black box algorithm. There's no AI genie, kind of, but not the way large learning models really work. Anytime you see a signal on this chart, it is the answer to the question, are there any times in the historical data of the market and time frame I'm trading where this, which side of the screen is on, where this is happening? That's where the signals come from. And if there's a large swath of space where there's no signal, there's no behavior pattern. But if there's a white line or a blue line, there is one. This scenario happened. And the program, I've been informed, over 30,000 lines of code, not 12. Over 30,000 lines of code find this and go, hey, it might happen again. So when we come here and we look at these charts, that's what we're looking at. When we got to 5:20, which is what, 9:20 London time, 9 or 10, I forget which. The program was warning us to look for another iteration of a repeating down move. Blue line is saying, it's here. I found it. It keeps happening. And so in that instance, you might want to put a stop right above the high to the left of it and try to go short until 7:20. Just like our example a second ago. Does anyone have any questions about that? Because this is really important. there really is sort of a good versus evil, David versus Goliath reality to these signals and the way we, and by extension you, can approach this. If this is valid at all, it's an immediate response to the three biggest bugaboos in trading. I overtrade, I make my broker rich. My stops are always too big because I'm giving the trade room to breathe. And I get out of winners early because I have no idea how long that trade has to go. And so ipso facto, right, you're getting out early because thank Jesus, Allah, and the Kwanzaa tree, it was green at all. So these three very critical, universally experienced things have no answer in ICT and volume and trend lines and fill in the blank, market profile, market delta, blah, 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 blah. They don't address those things. And so we're sort of left getting into an airplane with no parachute, having to trust the pilot, which lately, nothing against pilots. My wife said we're driving everywhere for a while, and that's all I have to say about that. Okay, so if we look for the lowest hanging fruit, I'm just going to put arrows near the signals where the thing we were expecting to happen actually happened. I'm just going to put an arrow where the thing we were expecting to happen in the world's largest index, right? These are the indices. And I'm just going to look real quick with you and see what percentage of the time did the thing we were expecting to see actually happen, right? This candle is literally off by 2 candles. I'm not going to count this one, right? And I'm not going to count 940. We also at 1 o'clock, we opened and came down. But if I go from the close, we actually finish higher than we started right there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 1, 2, 3. 9 out of 12 is what? What is 9 divided by 12? That's 75%. Well, what if I said it was 60%? What if we were able to do this and about 6 out of 10 times the market went in the direction we were expecting it to? Because today it was 75, but if we dumb it down to 60, or if I said, hey, is anyone here comfortable with a system that can do this? Maybe 6 or 7 times out of 10, I think everyone here would give one of their left body parts to have access to it. Yet, empirically, not everybody wants it, which is baffling to me. So this morning, I took a setup in the live advanced training room with people. There was a nice, we had actually tried to catch a long twice. We made it up and then some on the stop outs. But at 10:45 this morning, we came around and we sort of waited patiently and held it until the close of the 10:50 signal. And I have the recording if you want to go through it and watch and see, or as the influencers like to say, I got the receipts. So we recorded that live today, and we ended our webinar a little early because I had a second chance at a dentist appointment that failed because of the snowstorms yesterday. So that's an example of a trade that we took waiting for a time to occur. And then earlier this afternoon, the farthest away we are from the forecasts, remember, these signals were given to us 4 days ago. I'm going to remind you, 4, 1, 2, 3, 4, unos, dos, tres, cuatro. And this is as far away, this signal is the farthest prediction based on the behavior patterns that were intercepted from that original course of signals. And I want you to see, you could have waited for 11:55, you could have waited for 1 o'clock, 1:55, and 4 o'clock, instead of making the broker rich. And when you got in at 1:55, how long could you have held that trade? From here all the way to there. Most people are getting out here or getting out here. You have a reason to stay in it all the way until, what is that, 61.37 from where? 61.15. Let's call it a 20-point move or $1,000 per contract. Everyone tracking that? Okay. Let's go back and take a look at some, and here's the miracle of this. Everything to the right-hand side of this signal is already carved in stone. And this is what'll blow your noggin and where I get the most questions. Well, Michael, what about the unemployment per capita report being released tomorrow, where they subdivide the PMI, subtract a 1, and overlay the crude inventory report? You don't think they know what that report has? You honestly believe Jamie Dimon, who lies about everything, every word out of his mouth is a lie, has been fined more money by the federal government than any single financial banking institution in the world, in the history of money? You think Jamie Dimon is sitting there with you at 8:30 Eastern and going, I wonder what the unemployment report is going to say today. Stand by, traders. We have no idea what this report's going to be. Keep your fingers on the button in case it's good news. You don't think they have a plan? Are you serious? They have one Achilles heel. They repeat these times. They're so big, they have to repeat these times. They just can't buy and sell what they want. They can't move billions and trillions of dollars around willy-nilly with these algorithms. Time is a critical component. And so we see here into tomorrow, 8:55, 11:15, 2 o'clock, 10:55, 12:10, 3:20. In fact, I have the signals which never repaint, disappear, or reappear for the next 5 trading days, the next 7 days. These signals will not disappear, reappear, repaint, go away, come back. Which means, how long were our customers waiting, or how far in the future did our customers know these signals in advance? That 9:25 signal was 7 days old. That 11:55 signal was 7 days old. That 1:55 signal to the 4 o'clock signal was 7 days old. I want you to think about that. These guys who will never admit that they don't think in a million years you'd come to a webinar like this and believe what I'm showing you. And yet, here we are. Let's take a look at some larger time frames, because we're not just hanging out on the 5-minute chart. Here's gold on a daily chart. And how many of you remember when I said gold would stop going up? Be honest. I've been saying it for weeks now. I said we would stop on March, what? February 17th. On February 17th, we stop right here. So boom, that's where we stop. And look at that nice little flat marine jarhead haircut right there. Here's where it stops. Boom, bazinga. Where is gold likely to go up again, Tim? Stanley, when is gold likely to go up again? Not because I say it, not because I'm an engineer with patents and not because I have a big fancy computer and blah, 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 and I have colored lights in my studio. Where did the computer intercept a pattern that seems to be repeating again and again and again and again, where the blue signals either go sideways or down and the white signals tend to go up? Yeah, it's right here, March 5th. Well, what happens if you bought and sold? Let's say you bought and sold a micro lot in gold. Ready? Close to close. That's a $76 move, or 767 ticks. Close to close, 70. Close to close, 72. See a trend here? Close to close, 33. Close to close, 21. Close to close, 119. And boy, it sure doesn't look random to me when you look at the days that we were waiting for up moves in comparison to the other ones, right? That's a sleight of hand that the haters in the forums say, well, you could just buy anywhere in a trend. What happens if you bought on the 3rd, you bought on the 5th, or you bought on the 12th, or you bought on the 26th? Those were opposite. So we can zoom in on other markets now and take a peek. So here's our famous butt kisser in chief, Mr. Musk, who apparently makes more profits at Tesla with his Bitcoin investment than he did with selling actual cars, but I digress. You bought from October 8th until October 28th. You bought from November 21st until December 19th. And then right here, we called it a rotting banana trade, because the price kept going down and down and down. And we had a chance to take a small loser here. And then we were looking for the short on February 10th. If you think Tesla is going up, the answer to the question is now. Now is the reason you're looking for an excuse to go long in Tesla. I don't think you should, but if you're going to, you have a window from February 20th until March 4th. Let's come back out and take a look at Bitcoin. Bitcoin was a rotten banana too. I'll connect our Coinbase data feeds so we get an up to the minute update. Same thing. When do you buy Bitcoin? If you're a crypto guy. And don't tell me about you listen to that or you're a member of this forum and Elon Musk and Doge and Hawk to a girl and whatever. This is what institutions are doing. Bitcoin is no longer a coin for the people. It has been purchased and is owned by the large financial juggernauts of the universe. Okay. Yeah. At the white signals. Next signal is the 26th of February. After that is March 11th and March 28th. The problem I have is that we fell down here into the 17th. There's a point in the cycles where the signals all start going backwards. If we have time later, I can talk to you about that, but that occurs near trend reversals, by the way. Let's take a look at some other markets. I don't want to go into the lunar stuff with you guys. I always feel like that's too much. Any other markets you want to see on a daily chart? Here's silver. We talked about this last week. We said it was going up from the 7th until the 24th. Any other markets you want to look at on a daily time frame while we're out here? Right? We can look at the euro dollar if we want. We're up on the euro dollar from the 12th until the 24th. We're probably going to retest this 120 period moving average like we did back over here. Just a fact, this is a 120 period EMA. And what banks like to do is run the stops right before the selling signal comes. So expect, this is not educating advice, but I'm expecting prices to go through this high and touch the moving average before the 24th. What is TOST? See if I have a data feed for it. Here's TOST. Perfect. And we're presently, let me get my bearings. Okay, so John, here's what I do. When there is an uptrend, I am either looking for the buying signals and I'm looking for the failures of the selling signals. So John, on the 14th, I'm watching for prices to come down or go sideways. And this dotted blue line, like all the dotted lines, it's 1.5 ATR values or 1.5 of a daily bar away from the signal candle. So I'm a buyer of TOST when it comes through that blue line until this signal. So I'm a buyer on the 30th, the 24th, I'm a buyer on the 7th. I'm then a buyer on the 17th and I get my teeth kicked in here and I get my teeth kicked in here. The next time is on the 5th and then the 14th to the 24th and then March 5th. Right now, they're trying to push it higher inside of this window. You can see they came down and had a liquidity run here. And so we're coming up now on the 24th based on this chart and the way I think that banks do what they do. You see all those stop runs right here, John? In my estimation, there's a lot of stops waiting just on the other side of this that they'll try to take out by the 24th and then potentially drive it back down. 1127, sorry. Oh, yeah, that ended up being the high. About half of the time, the signals end up being the actual high or low, which is kind of cool. Yeah. But I usually see stop runs when we get near the selling signals. But that was a cool one to bring up. If we look at some more intraday stuff, right, these are some more of the signals that we were waiting for. We can pull it out here and look at the US UK session. Again, these were the gold futures signals. They were very correlated to the, yeah, no, Carrie, I saw that. I got it. And again, John, we get that same sense that, man, if we were just paying attention to these times, we would be doing better than we normally do ourselves trying to figure these things out, right? So that was what happened at the gold forecasts. How do you actually trade the signals? Yeah, let's go back and take a look at that ES chart for a second. And I'll show you the three setups that we use in my live training room. And if you guys aren't in there, I would strongly advise you spend a month in there with me. You're going to learn an awful lot. In the webinar forecast page, I actually give you 2 rules. I'm going to add a third one in here from now on so I can show you in advance what it is, but I'm going to mention it here today. So we have a signal with trend. We have a puncture. And then we have what I call an ACT or an aggressive counter trend setup. So let me kind of pull out here for a second. We've got about 15 minutes left before we wrap up and explain why these setups to me are important. They may not be the way you trade with these time signals. After 16 years, the thing I didn't expect was that every one of you would trade the signals differently. Whoop, fix your camera, dude. Every one of you takes the signals completely differently from everybody else. Some of you have small stops, some of you have large stops. There's not really a baseline where everybody does it exactly the same way. When we move into the optimist group, a lot of the traders there, they'll follow the same rules. If there's a good strategy or template, they try to emulate that, right? Nobody wants to change it. So that way it's the same. But in the trading world, every one of you is a snowflake, kind of doing everything differently. Except for one question. When we ask these people, hey, how are you trading the signals profitably? If you are. And in that giant pie chart, about 2/3 of the people who say, yes, I'm consistently making money, I'm in a good space, are trend traders. So as the trend is rising, they're not picking highs along the way. And as the trend is falling, they're not trying to catch, a falling knife. So about 2/3 of people who are doing really well in our group and in broader senses in other groups are trend traders. And so what I try to do is follow along, and these are the setups that I'm looking for. So if there is a trend, we identify it first with a 120 period EMA. That's the one I've been using for almost 16 years. There's nothing magical or special about it other than it's what I started with, okay? When there is a signal above the 120 period moving average, I count it as a signal with trend. And in my charts, in my live training rooms, you'll see me annotate that with an SWT. Now, the gap between the low of that candle and where that dotted white line is 1.5 ATR values. I covered these rules in the forecast sheet that you've had for 4 days. And now we're going to enter. And as long as we're above that 120 period moving average, we're going to hold it until 520, which is a $5.50 move. Okay, signal with trend. Now, John, when I get to 520 or carry like that 1127 signal, TOST chart signal on the 27th, here's this counter trend trade sitting in the middle of nowhere. We immediately identify, hey, you're blue, the trend is up, you're a counter trend signal. But Tim, I don't want to use a full stop. It's way up here, man. And I'm trying to stay with the trend. So the first thing I do with an ACT is I look left. Look left. Is there any reason to have a stop that's much lower than the original stop? And generally, I'm trying to look for halfway or less, but that's a general rule. In this case, there is structure to the left. And so I can move my stop from here to here. Aggressive counter trend. Now, how long am I going to hold that trade, Carrie? What is Mr. Histogram warning me about this window? Historically, the move lasted from 335 to 520. And historically, this move over thousands of iterations of historical bars has a shelf life of 2 hours. Oh, okay. So in the purest sense, the ACT has half the risk. It is risky because the trend was up. But John, if it's one of those trades that works, in this case, it worked. That's a $9 move. Okay. Now, at 720, is this a signal with trend or an aggressive counter trend setup? Is 720 a white dot above a white moving average or a white dot below the moving average? These are simple questions we can ask ourselves, right? There's not a lot of rocket science going on here. I love how simple it is. And again, we just leverage the copy paste to say, hey, that's a counter trend trade. What are we going to do next? Look left. Is there any structure there that's better than our stop way over there? This guy. We could put our stop right under it. If you're super hyper aggressive, you can put your stop right underneath the signal candle itself. That's an aggressive counter trend trade. I get in at the close, I get out at the close. +4. Okay. 925, guess what? It's an aggressive counter trend trade. It is above the moving average right here. Where's our regularly scheduled stop? It's way up here. We moving on up. It's up here in the east side. Way higher than George and Wheezy. If you got that reference, you're as old as I am or older. What are we going to do, Mary? Going to look left. Is there anything to the left that has structure that's lower than this stop? These two candles right there. We put our stop above it. How long do we hold it? What is the window? 925 until 940. A whopping 5 ticks. Count them in your face. Okay. The next signal, John, remember we were talking on TOST about the puncture? If it blew through the blue stop, we were going to buy over here. If it blew through that blue line, we were buying until 11:13, and then putting our stop right under the candle that blew through that blue line. Well, we can do the opposite when the ES is dropping. The candle at 940 closes underneath the moving average. So it's immediately an aggressive counter trend trade. Okay, so let me take some of these lines off. At the time, carry their structure over here. So there's our look left structure. Now, I'm going to get in and I'm going to get stopped out. And we're going to put the loss over here, -4. But now we get to deploy this guy right here. And this was in your trading rules. We get to deploy the puncture. Our sell stop, we had a buy stop here, a sell stop to get out, and then another sell stop right here. Because now we have transmogrified from an aggressive counter trend. Well, that didn't work. Let's see if it keeps going. With a puncture, our sell stop is right under the stop line of 940. It's a failure with trend. What it's saying is there are no buyers where they normally, when they normally come in. They're gone. The banks have altered the behavior pattern. They've abandoned it. Right? It's like Germany and France and Poland, they roll into Crimea over the barricades, over the dragon spikes, over the landmines, and they get out of their tanks and they look around and there's nothing, not a Russian fighter, North Korean fighter, nothing for miles. Why'd they leave? So now we're looking for a stop above the candle, which punctured the line. And this is in the rules that I gave you last week and this week too. So now we're short from here all the way until 1045, which is 22 points. Okay, everybody good so far? I'm using the rules that I gave you 2 days before the webinar. Let's add them up real quick now that you know what they are. Short from 1045 until 1050 plus 7. Aggressive counter trend trade. The stop would be look left over here, which is still better than 1050. I'm long until 1125 plus 5 ticks. Signal with trend from 1125 until 1155 plus $4. 1155 carry aggressive counter trend, look left. There's structure right here. It's better than the stop that was here. And now I'm long from 1155 until 1 o'clock. See how simple the rules are? That's what I love about it. That's plus $3. Signal with trend at 1 o'clock. Get out at 155 minus 2. 155 aggressive counter trend, white under the blue. You're on the wrong side of the line, son. Whew. I can use aggressive or conservative stops. There's structure here, and then I have 2 candles with big wicks to the left of me there. Neither of those are hit. And now from 155 until 4 o'clock is the window here to here. 3 rules, simple setups, signal with trend, puncture, aggressive counter trend. Way more winners than losers with a model that's based completely on an experiment that's 2 days old. What? So there's a difference between the signals that you're getting and the setups. There's a difference between these two. They're not the same. Could you trade the blue dots at a Bollinger Band, right? If you have a Bollinger Band and there's a candle with a sell signal here, that's when you get in and try to sell down? Sure. Can you trade with a system that has maybe a MACD, and as price is falling into a lower low, you have a buy dot right here, and there's positive divergence, and so you buy it because you see the divergence in the momentum? Yeah. But my setup that I'm teaching on Thursday is just a basic trend entry system, because most of the people who are making money with our tools or otherwise are following a system like this. Any questions about that? Because we've kind of done something impossible. Most of you have been burned or bitten so many times in the past that in this precise moment you are freaking out. I've bought so many systems. Oh, I have to tell Carol there's one more? How am I going to convince Bruce to let me get this? If I tell the guys at the restaurant when we meet at the trading club one more time that I did this, oh, they're going to laugh at me. Oh. Oh. So why did the ES have fewer signals than the NQ? That's a good question. So Joseph, can I share your question with everybody? Is that okay? They can't see what you wrote, and sometimes they think I'm making it up. I won't share your last name, just your last initial. Wow, that looks weird. Yeah, so Joe had a great question, and thank you for asking, by the way. Do I have a highlighter? Yeah. Because the intraday chart of the ES and NQ look pretty much the same, because I was only watching the NQ signals yesterday and today, I'm surprised to see and wondering why the ES had a lot fewer signals than the NQ. Your thoughts as to why? Yeah, sure. So first thing, let's take a look at the NQ. We'll blow that up. That's what she said. And so there's the NQ sessions, and we'll squeeze them all in. So Joseph, that's what you were talking about earlier, right? Okay. So there's two things going on here that are different. And a lot of people actually have a misconception that you may or may not have. The ES signals were all on a 5-minute chart. And the NQ signals were all on a 1-minute chart. And this introduces the idea of markets with regards to time having a fractal element. Fractal, as you may or may not know, means smaller patterns inside of primary patterns. And we can write infinitely there. So, Joe, what we would expect when we go from a 5 to a 1 is that we would see the same level of accuracy, but at a lower time frame. So, like for example, if we come and look at the afternoon on the NQ, can I say, yeah, no. It's a good question, because a lot of people will ask, why are the times different on different time frames? And I didn't do a good job explaining that. And so I'm glad you raised that issue, because what happens is inside of that 5-minute bar, the 1-minute bar, right? If you have a 5-minute bar that looks like this, that's the 5. The equivalent could have been a 1-minute candle that did this, and then the candle did this, and then the candle did this in the same 3 minutes. So on a 5-minute chart, there's no reversal to count for the timing software, but here there's actually a swing inside of the 5-minute bar, right? So the thing that I remind people is that generally speaking, though, the highs are at the highs and the lows are at the low almost exactly 50% of the time. Anecdotally, of course, right? But as we increase the size of the candle from a 1 to a 3, right? Joe, you see how there are fewer signals now? And we're starting to approximate the number of signals and the size of the moves as we did on the 5-minute chart. Yeah, so we go from a 3, and we're asking the computer, hey, look at the terms on the 5-minute chart now. And now that chart is starting to look a lot like our 3-minute or our E-mini S&P chart, right? We don't have to stop there. We can go up from a 5 to a 10. A lot of people look for higher time frame analyses from a 10 to a 60. And so you can use these larger time frames to make a determination about what you'll do on the 5 or the 1, right? So for me, somewhere around 9:30, I've broken the stop of that signal. Maybe I should be looking for shorts. Or I'm going to look for longs between 6 a.m. and 10 o'clock tonight, right? And then you can go all the way out to the daily. Let's do that. And we're looking at larger patterns now, right? We'll take our drawing tools away. Some of you want to have, options plays where you're using calls and puts to sort of get in the market. And then if I dare, let's go all the way out to the weekly. There's the weekly chart. And Joe, if you're a really big baller, right? You got a monster 401k from grandma's inheritance. She had that house in Boca. And she's like, Joseph, you were always my favorite. Every Christmas your card came and your sister and brothers forgot me. Take all this money and trade it with the Warp software on the 22nd like a baller. He would hold it I don't think your grandma sounds like that at all. I don't know why it sounded like that, but you would hold it until June. Until June. This is a weekly time frame using the same settings and the same set of indicators that we did on a 1 minute chart. So 243 to 253 is 10 minutes monster move. From today until June could be another one of those monster moves. And so time is fractal. There are patterns inside of the patterns. Whew, man, I'm exhausted. You guys really did a number on my big brain today. Thank you. My big brain needed a workout. So before we finish, there's a variant of Warp for TradingView called Kronos, Kronos. And I believe Kronos was the god of time. And I thought that was appropriate for that indicator, because the more we look and study time, the more we see these kinds of things are important. So I like to look at Bitcoin. Right here on Kronos, you'll see there are 3 ellipses that are chunking away. And it takes a little longer because it's a web-based platform, and TradingView sort of divvies up when the servers can be used for calculations. And it's a weird platform, but I know a lot more people use it than NinjaTrader. So we made a version of this available for it. And we wanted to be able to give those people the opportunity to see what they were seeing here over on this chart. I'm going to pull this over until the signals actually come back. When they come back, they get there. And so as we come into the conclusion of the webinar, I just want you to know, if you don't have, oh, here we go, pain in my butt. If you don't have NinjaTrader and you do have TradingView, we can make this work. And you can see those kind of same signals waiting for us out in the future, right? So it is available on TradingView as well. Let's go to the website. We spent a lot of money and a lot of time and an effort to make this a less confusing place for you. And inside of our trading tools, we have Warp. I like this image because if you've seen the movie Interstellar, nobody knows what's in the black hole. Nobody knows what's in, if you remember the name of it, Gargantua. And the whole key to humanity's survival is somehow getting the data from inside of Gargantua past the horizon. And for many customers, for me, you know, I'm hacking away at this, having the same experiences you're having. All my trades go in the wrong direction. I get out too early. I'm always on the opposite side. I trade way too often. And my big engineer brain said, well, how are these banks putting up record profits every quarter? Oh, this isn't trading. This is a gambling establishment. And the house always wins. But I don't know what the software in the slot machine is like. And so we're sort of peering into that same void of information. And what Interstellar did with the Ranger, right? They sent TARS in there with Matthew McConaughey, and he's able to use Morse code to get these gravity pulses back to his daughter to solve the equation, right, of gravity. I'm piercing that gargantuan void of institutional behavior patterns. And we're saying, what if we study time instead of gravity? What are the answers it holds for us? So that's what's available for Warp. And then if you're looking at Kronos, it's just a big old clock. It's all about, it's time. It's time. And so if you want to go the Kronos route, there's some opportunities for you to look at some charts here, look at the advantages of it. And there's actually a nice bonus promo going on right now where you can get it for $195 a month. If you get Warp, we've also added some examples for you to sort of see what this is like. Winners and losers on different markets. We have a video that explains how it's working, and then some additional things and videos that you can watch for that as well. But if you go to purchase it, there are two options, and there's a promo code I want to get for you too. There's a chance to get our monthly trading room, where again, this morning, this was just one setup from the trading room. And then we had another setup right after that in the NASDAQ that went a little over $1,000 that we called out there. And if you were in there, Carrie, you were there with me. This is all in a recording if someone doesn't believe me. So that training room meets Tuesday, Wednesday, Thursday from 9 a.m. Eastern to 11 a.m. Eastern, and you can add that in as your subscription. If you don't want that, just do a one-time purchase, and when you get to the promo code, enter WARPOFF. WARPOFF, warp off, lowercase, no spaces, and when you hit apply, that's going to take $500 off the price. So you have two options here. You can go Kronos or you can go Warp. Kronos is nice because you can get in there for a month and start to use it. There's more information coming out every day about these signals and what to do with them when you get there. Ninja has a little bit more computing power afforded to us, and so we can do more things in the code. Again, 33,000 lines of code as opposed to 10,000 characters. I forget what the exact number is. And then it's just a question of asking, do I want to see the times every day? Do I want to have an awareness of when these banks are about to drop the hammer? Do I want to be on the right side of things half the time, 60% of the time, 70% of the time, or more? Right? Your mileage may vary. And I can't answer that question for you. Any questions about this before we finish up here today? Again, more information available at backtothefuturetrading.com. My phone number, if you need to reach me, is 336-703-76067. 7667 336-703-7667. And again, my name is Michael, M-I-C-H-A-E-L at backtothefuturetrading.com. Michael at backtothefuturetrading.com, area code 336-703-7667. Please, if you can, text first or email me that you want to call me. Tonight, for example, is my son's 25th birthday. What? And he wants to have hibachi dinner with his girlfriend and future ex-in-laws. So it would be hard to have a call with you after 7, but I'm free for another hour and a half or so. And that's all I've got. Pretty cool stuff. We're not going to stop until everybody knows this is happening. We're not going to stop until everybody knows, or at least has heard, that this is real. So if you have a friend, if you have a trading group, a Discord, wherever you're at, please help us spread the gospel of time. I don't care if they use our stuff or somebody else's stuff. Let them know that time works. Okay? May the wind be at your back. May the sun shine on your face. May the valleys rise up to meet you and the mountains lay low before you on your journey. I do wish you success and joy and prosperity and health and fellowship. Mostly today, I'm sending out vibes of peace I wish us all peace. Let's have spirited debates and conversations and exchange ideas, and let's not vilify and demonize and dehumanize. Be a light. Be encouraging to somebody. Give yourself a break. You're doing great. I'm proud of you. You learned something today. And not a lot of people learned something today. So you're in a very small group of people whose brains are a little bigger than they were when we started. And I'm really proud of you. Great job for that. I will see you all next week. If you don't have the software and you trade tomorrow, remember, you were warned. There was a lifeboat. You had a life jacket floating right there next to you, and you ignored it because your lesser thoughts and inner demons were louder in your ear. Don't let that happen. Take advantage of it. Remember, you're not the first person who did this either. There are literally hundreds of people who came before you and wanted you to know that they had a great experience with the program, watching this same webinar and taking the same steps that you're about to take. So don't fear. The water's fine. I love you guys. I'll see you next week. Have a great day.